The RSI, I'm sure it's one of the most famous indicators. I'm sure that everyone knows about the RSI, but how many actually know how to use it exactly? How to use it in a way that works rather than what everyone else is teaching you, what everyone else is showing you. Well, in today's video, I'm going to teach you exactly how you can use the RSI in a way that even anyone can understand, even a 3-year-old can understand this. It doesn't matter if you're intelligent or not. I'm sure that you'll be able to use this strategy to make a lot of money, right? So what's up, guys? Welcome back to my channel. So in this video, I'm going to be covering the RSI. So what is the RSI? The RSI is just an indicator, a technical analysis indicator that we use in order to trade, right? How is it calculated? It's calculated by a specific formula that takes into account the average gain over the average loss, right? So that's why people usually say that the RSI is oversold, it's overbought, right? But that doesn't work. Sorry to break it to you, but I'm sure that almost everyone that trades RSI is just uses the overbought and the oversold levels. Comment in the comment section down below how you trade the RSI. Do you use the overbought or the oversold, and or what you were taught before, right? But in today's video, I've got something different for you, right? So in today's video, I'm going to cover how you can use the RSI to determine the trend. I'm going to talk about divergence. I'm going to talk about trend lines. Yes, you read me right. Trend lines. I've got trend lines. I'm going to show you how you use trend lines on the RSI, right? Then I'm going to show you the entries and the confirmations to entries. So it's going to be a little bit longer video, right? Because I want to make sure that you understand each and every concept about the RSI, right? So stay tuned and watch till the end for you to be able to use this strategy effectively in a way that you'll be able to make lots of money. Why am I using this? Why am I teaching you this strategy? Because when I started trading, I didn't have a mentor. I didn't have anyone who teach me, right? So I just watched other videos and they just taught me the overbought and the oversold, and I continuously lost money using that. So I'm going to be teaching you exactly how it's done, right? So in today's video, I'm going to be using the RSI period is going to be 21, right? I don't like the RSI period 14 is it changes too quickly, but the RSI period 21 is moderate, right? It's not too slow, it's not too fast. That's why I use the period 21. So let me show you just how you can set up settings for this, right? So go to insert. You can set this up on your phone also, right? I usually, most of the time, I even use the RSI on my phone, but I'm going to show you how, right? So period is 21. I'm using blue. Colors doesn't matter, but what I want you to use is these levels, right? So I'm going to be using the levels 40, 50, and 60, right? Then 40 label it's still buy, 60 label it's still sell, and 50 label it equilibrium. And I'm going to show you how exactly you're supposed to use these levels to get very good entries, right? Get very sniper entries. So then that's it. Then you just click done. You can set this up on your phone also. Just use the period is 21. Yeah, but I just wanted to use the laptop so that you can see the larger picture of what I'm going to be showing you, because I promise you're going to gain a lot from this video, right? So what do you have to know? So what we're going to be using for our trend is these levels 40 and 60, right? Level 50, I'm sure that everyone knows that if the RSI is above the level 50, right? The level 50 over here, the RSI is above the level 50, it's a bullish trend, it's an uptrend. And if the RSI is below the level 50, it's a downtrend. I'm sure that most people know and appreciate this, right? What do you have to do, right? So, but today I've got a very special twist. I've got a twist that I'm going to be showing you. What you have to know is that if the market is trending upward, we're in an uptrend, right? So if we're in an uptrend, the RSI ranges between the levels 40 going maybe to 60, 70, 80 over there, but mostly 70 or 80, right? That's why the overbought levels and the oversold levels don't work, because if the RSI is ranging above around the levels 70, which is the oversold, it shows that the market is truly trending up. It's in a strong uptrend, right? So if you are looking to sell at that moment, know that you lose a lot of money, because the market is in a true uptrend. Let's take this for example, right? So the RSI was overbought, and as you can see, the market still continued going up. So this is just a general misconception that people have, that if the RSI is at the oversold levels or overbought levels, it will reverse, right? But that's just a lie. It's just a scam. I'm going to show you exactly how you use these levels, right? So when we've got when you're in an uptrend, right, the RSI ranges between the levels 40 and maybe the upper levels don't matter, right over here, right? So when you're in an uptrend, as you can see right here, right, when you've got a pullback, say that the pullback will end at the level 50 like it did here, right? Level 50, you take your entry. I'm sure that everyone knows this. If it reaches level 50 and you've got a candlestick confirmations and the RSI starts to form a curve, I'm sure you know what a curve is, right here. When the RSI reaches here and forms this curve right over here, this curve, and showing out respecting the what is showing a curve also on the main chart, you take your entry. But what I want to talk mostly about in today's video is that's why I labeled it still buy, because it's still showing it's still an uptrend, right? So as you can see, when it pulls back and reaches level 40 over here, when you've got so like ugly W, it's consolidating, it's showing that it's most likely going to respect that level, right? So as you can see, we shot right back up, pulls back to the level 40 again over here. Yeah, that's this over here, it shot right back up again, right? So that's why how we are going to be using the levels 40. Though this, I wouldn't take these entries because they broke the level 40 a little bit. I'm using the level 40 only, right? That's what I'm using. As you can see over here, you are just waiting until what RSI pulls back to the levels 40 or the level 50, of course, right? Like over here. So we're only taking our entries when the RSI pulls back to the level 40. You just have to know that if the RSI, as long as if it hasn't broken the level 40, especially if it breaks and continues ranging below the level 40, that's most probably going to show a change in trend. But if it just breaks a little bit, still probably what going up. So that's it for the what for the uptrend. Then what do you have to know for a downtrend? For the downtrend, now we are losing the level 60. So let me just check where we've got what a downtrend. So somewhere like over here, right over here, we've got this downtrend over here. So what are we looking for? When the RSI pulls back to the level 60 and holds, it shows that the market is still in an uptrend. This isn't a perfect downtrend. It's so like a ranging. If you go to the 4 hour, it was ranging, but that's just what I wanted to show you. If it respects the level 6, it's most probably still going to go down. If it respects the level 40, it's probably going to go up. That's just what I wanted to clear my chest and share with you guys. Then that's it for the trend, right? Then what is divergence? I'm sure that everyone has heard this term divergence, right? And I'm sure that it can be quite tricky at first, right? So divergence is just that we're saying that on the main chart, the candlesticks are following what? Let's say let's take this example. It's a perfect example right here, right? So we've got two types of divergence. We've got regular divergence and hidden divergence. So right here we've got what regular divergence, right? The market, as you can see, right here went up, then created a lower low, but if you go here, right here, the market created what? A higher high, right? So this is the divergence, because right here we created a lower low and here we created a higher low, right? So this is the divergence part of it, right? Because right here is showing that it's going up and here is showing that it's going down. So after the divergence, most of the time we anticipate a pullback or a reversal, right? But the other misconception is that whenever you spot divergence, the market is going to reverse immediately. That doesn't work, my friends. That's it's just a lie. Let's take this for example over here. We've got divergence. Let's stay up until this point, right? Because right here it's showing, as you can see, we've got divergence here, but did the market go up immediately? It didn't. It even continued down a little bit further until it went up, right? So when you're using divergence, you have to have another strategy in mind, another entry, another method that you'll be using in order for you to confirm that trade, right? So let's then for hidden divergence. For hidden divergence, now it's a little bit tricky. It's a little bit harder to spot, right? But if you get used to it, you'll be able to see it, right? So hidden divergence. Now let's check this peak and connect it to this high, right? Let me just clear this. I'm very bad at drawing, sorry for that. But this small peak right over here, right, and this high over here, this is this peak over here. So as you can see on the main chart, we are going what? Down, but on here it's pointing up, right? So this is what hidden divergence. It's so like just the same, but it's so like a little bit similar, but there's a little bit difference. But just know that whenever you spot divergence, you take what you anticipate what? A reversal, right? So this is what regular divergence, and that's what hidden divergence. So on regular divergence, this example over here, on regular divergence, we have to know that the market will reverse, going in the trend shown by the what? By the RSI. And on hidden divergence, now the market continues in the what? Reverses in the trend being shown on the what? On the main chart. That's the only difference, right? So that's it for divergences. Trend lines, I want to show you trend lines, right? So let me just show you this example over here, right? So trend lines, we can use the RSI to determine the trend, right? So let's take this for example. We draw a trend line over here. So we know that when the trend line gets broken, right, it gets broken somewhere over here, it's almost relative right over here. It's showing that that the market is most likely going to reverse because the trend line has been broken, right? So take this for example. After we broke out, we continued going down. Then right here again, we've got this trend line gets broken, shot up, and as you can see on the chart, the market continued going what? So it's very simple to use the RSI. I don't know why it's quite hard, why people make it look as if it's hard. Then for our entries, right? So for our entries, I'm going to be combining this with a little bit of BTMM. I'm a BTMM trader. I'm going to be combining this with a little bit of BTMM. Then I'm going to show you other strategies that you can combine the RSI with in order to maximize our profits and our entry confirmation. So right over here, I'm going to be adding, so price line, the RSI is the price line. So I'm going to be adding the signal line, right? So the signal line, we're going to be adding a moving average, right? Then the period, let me just insert it over here. So if you're on a laptop, you drag the moving average and you insert it on the chart, on the indicator window. Now we're going to set this up. And if you're on a phone, you just on the indicator window that RSI is on, that's where you insert the moving average, right? So the moving average is going to be period of 7, right? Exponential, right? I'm going to be using simple here, right? Apply to, right? I'm I'm going to say apply to first indicator data, right? Then I'm going to change this to red. I just love red, right? So that's how you set this up. Then there's no levels and stuff and all that, right? So just this. So that's how I'm setting this up, right? So we can use this crossover as our for our entries, right? So let's take for example over where was I, right? So okay, let's use those levels that we were talking about. Those level what? Let's take this for example, right? So when the RSI is on the level what? On the level 60 over here, you take your entry when the what? When the red crosses what? The blue over here, right? So it's just a simple crossover strategy, and I'm sure it's going to help you a little bit more. When it respects the level 60 crosses over, you take your entry, right? It's quite simple, guys. Let me remove this. So that's how you use this, right? So whenever it respects the level 60 crosses over, you take your entry. That's for the entries part. It's actually very simple. And if you like this video so far, pop the like button and comment in the comment section down below if it's helping you. You take your sales over there. That's the first entries for our entries, right? Then we can also combine the RSI with other indicators, right? So I'm just going to be using the moving averages in this. After the moving averages, then maybe you can also use the Fibonacci, right? So the moving averages, I'm going to insert moving average, trend, got moving average, right? So we're going to be setting what? We're going to be using the moving average period 50. Now we're using exponential. Now we're going to remove simple, right? So then I'm going to be choosing black for this one. Okay, then I'm sure that if you've been following me for a while, you know that I usually like to use the black moving average for the what? For the 50 moving average. Then for the 200 moving average, that's what I'm also going to be using. Then you know that I usually use paper again, right? So that's what I'm just going to be using. Then click done. So how do you enter using this, right? So now things get interesting. RSI pulls back to the moving average 50, right? Most of the times the RSI will be around the level what? The level 50, right? So we're going to be entering when there's a crossover, right? Or there's a candlestick confirmation over here. So when there's a crossover, we take what? We take our entries, right? So it's very simple. And then most of the times, let me just check for an example. When the RSI pulls back to the level what? To the 200 moving averages, to the 200 moving average, the RSI is usually around the what? The level 40 or the level 60. In this example, it's around the level 60, right? So when it crosses over, you take your entries. So if you want me to go much more in depth on this strategy specifically, leave the comment in the comment section down below, right? So as you can see right over here, it pulls back to the 50 moving average. It's also on the level 50 crossover, you take your entry. Level 50 crossover, you take your entry, right? So it's very simple, right? So that's it for the what? For the moving averages, right? Then you can also use the what? The Fibonacci, right? So let me delete this right over here. Well, let's insert the Fibonacci, right? So you just have to, when there's a break of market structure to the downside, right, you draw a Fibonacci going down. After drawing of Fibonacci, pulls back to the level 50. The level 50 on the Fibonacci is pulling back to the 50 moving average. It's also pulling back to the level 50 over here. So when there's a crossover, it's a higher confirmation that you are going to be going down, right? So that's it for this video, guys. If you like the content, like, subscribe, and share, because I'm going to be dropping much more bangers like this. So stay tuned and watch more. Right? So, and if you also want to know how you set up with the Fibonacci, just check out the video that I'm posted on the Fibonacci. Yes, you can search through my channel. I'm going to leave a card or a link in the description box down below. Right, that's it for this video, guys. Thank you.